Good afternoon, BINUS. Let me put my slides on. Can you see the slides?
Yes, we can see.
Okay, great. So it's a big honor for me to speak in front of such amazing audience. Although this is online, it would have been better offline, but due to this pandemic, it's better online. Yeah. The coronavirus has placed significant impact on the global economy as well as our daily lives. This new breed of virus is likely to change the way we work, the way we learn, and the way we invest. That is why it's very timely to discuss about the implications of the COVID-19. And today I will be discussing the overview of the virus, the social and economic impact of the virus in Indonesia, impact on businesses, and how we should invest during this difficult time. So, the coronavirus disease is an infectious disease caused by the newly discovered coronavirus. It is likely that the coronavirus originated in bats here, um, but passed through an intermediary host animal before infecting humans. At this time, COVID-19 has evolved into a highly contagious virus that spreads through the droplets of saliva or discharge from the nose. Unfortunately, the world is yet to develop an antivirus at this stage. Hence, personal hygiene and social distancing is very important to contain the spread of the virus within the community. Most people infected with this virus will experience mild to moderate respiratory illness and recover without requiring special treatment. However, older people and those with underlying medical problems such as cardiovascular diseases, diabetes, chronic respiratory disease, and cancer are more likely to develop serious illness. Most of the symptoms are mild flu-like symptoms, while a few cases will develop into critical state. It is important to note that practically all of the reported cases involve fever. So if you have fever, you need to stay at home and seek medical attention. According to the various sources like Reuters, Johns Hopkins Hospital, as of April 12th, 1.8 million people have been infected with this COVID-19, and at least 109,000 people globally have died from this disease, with a fatality rate of 6.2%. The WHO referred this virus as a pandemic on March 11, 2020, although we believe that this declaration of pandemic was a little bit outdated, but still it's better late than never. You can see that the total number of infected cases are gradually moving up, while in Asia it has surged, came down, and gradually also moving up the curve. Now, next, I would like to discuss about the social and economic impact of the COVID-19 here in Indonesia. The COVID-19 in Indonesia, we are seeing 4,000 confirmed cases with death 373 as of April 12th. So this implies a fatality rate just shy of 10%. Now, it's very important to note that about 52% of the total cases are concentrated in Jakarta. And it's very important for us to realize that in Jakarta, we have better medical infrastructure, hence detection is likely to be a little bit more early than the rest of the other regions, where medical infrastructure might not be so well established. Also, we would like to highlight that Jakarta is a region where most of the foreigners resides to do their business, across the nation. Hence, any contact with an infected foreigner might be able to expedite or accelerate the infection. So we would like to classify this as the COVID-19 cases have been affecting the middle class and up. We have yet to see a very wide spread of this, the spread of the virus down to the mid to low income households, and that would be a very big homework for the government in containment of this spread of the COVID-19. In Indonesia, we're seeing both panic buying and also panic selling. As depicted on the left hand side, we're seeing these staples products like rice, toilet papers are being quickly removed from the shelves. And also there are long queues in front of the counters. Anecdotal experience, I had to wait for about 30 minutes or more, while paying for my groceries last week because there were so many people, lined up to buy these staples products. You can see that on the right-hand upper hand chart, foreign investors have been selling Indonesia's government bonds, and also they've been selling equities. But this is not the case only for Indonesia, that this is the case across the whole world. The Indonesian government is quickly responding to stop the spread of the virus by declaring a state of emergency, and Jakarta governor declared his state of emergency a couple of weeks ago for 2 weeks. And also our operations, despite our financial institution being classified as a essential institution that needs to run, we're working with the minimum number of employees here in the office. Most of our employees are working from home. Recently, the Jakarta governor and also the central government issued a large-scale social restriction program, which is called PSBB, and there have been very strong restriction on the mobility of everyday people. Hence, it is a de facto lockdown without the official lockdown announcement. Our head of research, Mr. Haryanto, has recently visited some malls, and he also collected some scenes from the street. And we can see that most of the economic activities are all stopped, are all full stop. Simply, malls are shut down, businesses are shut down, restaurants are shut down. So, social restriction comes with a very high price, which is this the sacrifice of the nation's economic growth. As this COVID-19 simmers down, I think the economic growth for Indonesia is likely to slow over the next couple of months and quarters. As we've mentioned, that this social restrictions comes at an expense, and as if China is any indication or a precursor, you can see that in China, retail sales have plummeted and also industrial production has plunged. In Indonesia, retail sales is on a downward trend, but not so severe. However, over the next couple of months, we are likely to see a very sharp decline in the retail sales as well as the PMI data. The IMF yesterday announced its global economic growth outlook. And surprisingly, well, not surprisingly, to be really honest, not surprisingly, the IMF has revised down the world economic growth to -3% in 2020. The actual number for 2019 was close to 3%. Now we're expecting about -3% in 2020. And that goes without saying, all of the other regions will experience similar kind of a trend. But the most important thing here is that the developed market will experience a larger decline in the economic growth in 2020 relative to the emerging markets such as China, India, and also Indonesia, where we believe, well, the IMF believes that the economic growth will now go to the red territory. The economic growth in 2021 will see a sharp increase due to the low base effect. And in Indonesia, the growth forecast for 2021 is 8.2%. Now, next, I would like to discuss the COVID-19 impact on businesses. And here I am presenting three key industries, including tourism, manufacturing, and retailers. First, we have to highlight that this coronavirus originated in China. And it's very important to know that China is a formidable economic dinosaur at this stage. If you look at the right-hand chart, you can see that China commands about 16% of the world economy. More than a decade ago, China's economy comprised only 4% of the global economy. Now it went up fourfold to 16%. In particular, if you take a look at the share of the manufacturing in the world, China accounts for about 40%, which is, again, another fourfold. If we take a look at tourism to begin with, tourism is an industry that is likely to feel the direct blow from this COVID-19. As depicted on the left-hand chart, China comprises about 277 billion spending across the globe. So if Chinese tourists were to stay locked down in China, we believe that this number could shrink very, very sharply. $277 billion worth of spending in China is about 1/4 of what Indonesia generates as a GDP for the full year. So this impact is pretty severe. On the right-hand chart, you can see that the RPK, revenue per kilometer, which is simply airliners' revenue, is expected to decline about 29 billion in 2020. And most of that impact will be concentrated here in Asia Pacific, given the fact that China is the originator for this COVID-19. However, bear in mind that IATA released this forecast before the rest of the world began to actually, experience this impact of the spread of the COVID-19. Hence, so actually it was before the WHO's pandemic announcement. Hence, we believe that as we head into the later half of this year, the impact of this revenue for the airliners could be more severe than what was originally forecasted by IATA. Now, if history could be any indicator for the future, IATA, rolled out this interesting chart where it shows that back in 2003, the SARS outbreak, it took about 3 months to reach the peak and then another 3 to 4 months to recover back to normal. This is a normal state. So in China, the first case of the coronavirus, if I am correct, was reported on December 31st of 2019. Hence, China actually slowed down in the month of March. The number of increase actually plateaued in the month of March. So if this is any indicator, we would be able to see stabilization of some of the infected cases starting from the third month of the full-fledged outbreak. In Indonesia, the full-fledged outbreak began in mid-February and March. So we would have to wait until May or June to actually see the number kind of stabilizing, or it could extend up to July. Secondly, we want to move on to the manufacturing industries. As depicted on this right-hand chart, the PMI data in China shows a sharp decline in the month of February. And if this were to prolong, I think this could have serious impact on various industries, including iPhone, automobiles, so cars. Hyundai and Nissan have closed plants, and also Diet Coke. So we think that this pandemic situation, if it were to prolong over the next months and quarters, we think that this could place some significant impact on the global manufacturing. Also, we would like to highlight that China is the largest demand of oil across the globe. China currently commands about 25% of the global oil demand. And with China, having difficulties in operating its manufacturing business, the demand is likely to come down sharply. And it is also depicted here that the commodity index is on a free fall. As you know, oil prices has been impacted the most, and we believe that this could actually negatively impact Indonesia as well. Thirdly, one big issue that investors should understand within the global manufacturing is protectionism. Now, we've seen protectionism going big earlier on. We've seen political protectionism such as Brexit. We've seen economic protectionism like US and China trade war. However, this time around, I think protectionism is likely to evolve into something bigger. As you can see on the right hand, news highlights, that the government in Thailand, Taiwan, Iran, and also South Korea, they've all banned masks, exports of masks. So this, uh, you know, this banning of exports is of essential products, essential manufactured products, are likely to impact global society as a whole. Just bear in mind that 97% of all antibiotics produced in US, the active ingredients are from China. The most important job for any world leader at this stage is to protect its own people. President Jokowi's number one role is to protect Indonesian people. Hence, if China, say for example, were to ban all the exports of antibiotics, I think it could have some serious implications in the healthcare system around the world. Just to let you know that antibiotics exporter, China commands about 30%, which is pretty big. Next, we move on to the retailers. As you can see, Walmart, Home Depot, Starbucks, and Macy's, they've all announced some negative impact from this COVID-19 outbreak. Negative financial hit, material negative effect, delay bigger ticket home improvement projects, so on and so forth. And we believe that these, non-essential goods producers and distributors are likely to feel a very big blow of their businesses. To be more exact, let's take a look at iPhone. Take a look at Apple, which produces iPhones. Now, if you take a look at Apple revenue, you can see that as of December 2019, Apple reported about $90 billion, $90 billion worth of revenue. And the significant increase here was due to the iPhone 11 release, which was released on September 2019. The street estimates for Apple revenue in March of 2020 is likely to be about 60 billion. However, this is likely to be revised down further due to the fact that most of the people, most of the consumers are locked up in their home. So low offline traffic will reduce the retail spending of non-essential goods. Only demand for essential goods or staples goods are being taken off from the shelves. The retail industry is likely to experience, likely to illustrate some recovery as we head on to the later half of this year. However, we have little idea as to this recovery will be a V-shaped, a U-shaped, or possibly an L-shaped. We will have to take a look at how this COVID-19 outbreak evolves or develops over the next months and quarters. However, we are yet to actually discuss about a recovery situation at this point in time. Moving on, I would like to let you know that oil price is falling quite significantly, and this is a very big problem for most of the countries that export oil and also import oil. And here's how I believe that is different from previous cases. We are very, concerned with the oil price decline. And as we've seen here, this is the outbreak of the SARS depicted in a gray line, and outbreak of the COVID-19, which is illustrated in the orange line. You can see that after the 60 days, the SARS outbreak, oil price actually went up. Well, actually, commodity prices went up. However, during this COVID-19, we're seeing a very sharp decline. Commodity prices are down 23% year to date, and this is as of March 17. The disturbing fact about oil price is that oil price is falling because of both supply and demand. It's very rare we're seeing that there is a both supply and demand issues that's currently pushing down the oil price. Demand side, it's a no-brainer. Basically China's manufacturing PMI is down, hence demand slows, oil price goes down. That's a very common sense. Also, another evidence is the power consumption in China has dropped significantly, similar to that of seen during the global financial crisis back in 2008. But also, we're seeing a breakup in the OPEC alliance. Well, actually, with OPEC, with Russia, the alliance has collapsed. They're not currently thinking about cutting production. Saudi, the kingdom, is reported to be selling oil at $10 per barrel. Oil price, as of my memory, last time was about $27. They're selling at $10 a barrel. Now, this chart on the right side is the cost of oil production. And you can see Saudi Arabia's cost of oil production is about $9 per barrel. So they're selling at practically the production price, $9. They're selling at $10 per barrel. And this is because OPEC's alliance with Russia turned sour. Saudi Arabia is saying, okay, if the alliance has collapsed, I'm going to just slash my oil price so that I can grab market share. And Saudi Arabia, with this low oil production cost, is likely to win this battle if we look at it from a superficial standpoint. However, bear in mind, Saudi Arabia's cost of oil production is very, very low. But if we actually take a look at Saudi Arabia's cost of fiscal break-even for Saudi Arabia, it's actually close to $90 per barrel. The fiscal break-even is including all the social welfare programs that Saudi Arabia provides to the citizens or the nationals with their oil sales. Now, I have actually had a very opportune experience of living in the Middle East back in 2007. I lived in Arab Emirates, I lived in Qatar, I've lived in Bahrain. And an interesting thing that you need to realize is that if a Saudi national or a Arab Emirates citizen were to get married, they are given a house from the government, from the country, because Saudi Arabia and these Middle East countries, they don't collect tax, they collect very minimal tax, so they provide these social benefits. Now, at oil price $27, and as mentioned earlier, the actual cost of production is only $9 per barrel. But if you include all that, it's actually $9 per barrel. So if oil price remains at this low level, Saudi Arabia could, and other Middle East countries could fall into a very fragile state where the citizens might actually be very dissatisfied with the welfare program provided by their governments. Hence, it's not a very easy solution for Saudi Arabia at oil price $27 per barrel. Now, for Saudi Arabia, they have three choices to make. Number one, lift oil price, by alliance with Russia and everybody else to cut production. Secondly, use up their FX reserves, but this is not a very easy solution because Saudi Arabia and most of the other Middle East countries, their FX is pegged. So if they start using their FX reserves, then most of the nationals there are likely to go to the banks and start exchanging their local currency into dollars, which they might fall into a very fragile state in terms of their fiscal status. Or last but not least, they could borrow money, but this is also not a very easy solution for them to make at this stage. Now, going to US. Just thinking of it from a very logical or common sense perspective, U.S. used to be an oil importer, but so low oil price is actually good for for United States. But actually, as of November 2019, U.S. is now a net export of oil. And in this process, what happened was that U.S. invested heavily in this rig counts. So, in order to pump up oil, you have to stick, like this rigs down to the earth so that they could actually pump up oil. And in this stage, for US to become a net exporter of oil, they invested heavily. And exploration and production industry in the US is supposedly carrying about $100 billion in debt, which is pretty huge. So if oil price remains this low, all the oil pumping has to stop, because the more oil they pump, it's a loss for US. So if oil price remains at this very low level for a prolonged period of time, I think it could be very troublesome for most of the countries that exports and produces oil. And also in the US, the distressed bond market is showing signs of high risks at this stage. Similar, well, still a long way to go, but it's closing in on the level that we've seen during the global financial crisis. So right now we're seeing a very fragile market situation. The next I would like to discuss is the inability of the global central banks. And here I want to discuss about two crises. Number one is the Asian financial crisis. We've also experienced this here in Indonesia, and also the global financial crisis, which happened a decade ago. Now, if you take a look at the Asian financial crisis, Thailand was the first one to be hit during the Asian financial crisis. This is where everything started. So you can see that Thailand's debt to GDP soared here in 1997, and then they delevered. Also in Indonesia, we've seen some spike in the debt to GDP, and then Indonesia also deleveraged, and Indonesia is one of the lowest geared country across the world. Also Korea, we've experienced some problem back in 1998, highly leveraged and then actually deleveraged. This was a time when U.S. actually saved the day. U.S. was the savior by intervening in the global market, and then they saved the day. Now, in 2008, due to the fact that U.S. was highly levered, they actually deleveraged their balance sheet, U.S., and they've been continuously deleveraging. Indonesia didn't lever too much. Thailand was not a big didn't gear up. Korea geared up, but the most important savior back in 2008 was China. China geared up its balance sheet. We've seen a very sharp rise in the debt to GDP, and China is still very, very levered right now. So if we were to experience a shock, who is going to save the day for the world? China is already levered. Korea is already very high leveraged. And also, that goes without saying, US will be the only one to save the day, but will they? I don't know. Also, since we're on these discussions with the US, there have been multiple crises across multiple decades in the US. The recession is depicted in a gray area. And during a recession, what's interesting to see is that US Federal Reserve cut its policy rate, federal funds rate, during recessions. And the gravity of this decline is more than 5 percentage points during recessions to fight against it. Now, the Fed has already pulled its interest rate down to 0 and has no room to cut further. And if the central bank were to cut this into the negative territory, I think that would spark a very big shock across the world, because then the dollar loses its state as the world's safest, asset class. Right now we have 0, so there's no 5% point decline that the Federal Reserve can do if the recession hits United States. And that's why the monetary tool for the Fed is not an answer at this stage. That's why the United States is using fiscal measures to counter this problem. As you might know, the US announced that they're going to send $1,000 check to everybody to combat this coronavirus. And basically, we have to acknowledge the fact that US government debt to GDP is at a pretty high state. Now, here's an interesting question that I might want to ask you. If you have $1,000 in your pockets, will you be able to spend that right now? The answer, I don't know, but it could be no, because nobody's allowed to go outside. So if you're given $1,000 and you want to buy an iPhone, how do you get there? You can't go there unless you have a very good reason, right? And most of the people are not going outside. And plus, consumers in the US, it doesn't seem like they don't have any money. I mean, average hourly earnings is close to about $28. So in the US, I think the problem is not that they don't have any money. So like if the Federal Reserve were to give, or the federal government were to give $1,000 check to everybody, I don't think that would have a very, big implications on the recovery of the US economy. I would rather want to take a look at this as a political strategy. The presidential election in the U.S. is just around the corner, so I think President Trump is trying to, use this kind of a rhetoric to kind of like get his, popularity on the rise. However, we've seen a slight recovery during recent couple of weeks in the equity markets especially, and I think this is due to the reinforced confidence that the global central banks will do whatever it takes to defend the economy. And as seen here, Central Bank of US said that it will do whatever it takes to combat the situation. Now, I want to discuss, finally, the final stage of my presentation is discussions on investment strategy. And I want to let you know that we're dealing with a unquantifiable risk. Most of the risks that we see, be it US-China trade war or Brexit or whatever risks that we're dealing with, we can basically quantify. Any imports coming from China to the US, we know how much that is. So add more tax rate to that, then the economic impact is how much we practically know. However, this pandemic called COVID-19, this is the first time in history that we're dealing with a recession that's sparked from a virus. So this is unquantifiable. Take a look at this, thesis or report written on February 12th. This, team projected that the COVID-19 case in China could go from 68,000, best case, to 290,000. Now, this is a stark difference because actual, confirmed cases in China was just a tad shorter of 80,000. So though there's such a wide range in this, assumption in this thesis. Also, another thesis written recently shows that the total number of people dying could reach 38 million people across the world in a mortality scenario number 2. If this were to go serious, then this report says that there could be 68 million people dead across the world. Now, this is pretty severe, and I don't want to even discuss about the possibility, but these scenarios are coming with a very scientific, analysis, but these analysis could be very, very wrong from what we might have to expect going forward. So that's why we will call this unquantifiable risk. Hence, if we're dealing with an unquantifiable risk, especially when we're looking at the stock market, US was on a free fall, Indonesia was also on a free fall, the fundamentals of the stock market has little meaning at this stage when we're dealing with a pandemic driven sell-off. Because it's unquantifiable, we have to go back to the basics of the pricing mechanism, which is supply and demand. If there are more people who wants to sell, then basically the market is likely to go down. If there are more people who would want to buy, then the market will recover. However, at this stage, I think there's a little bit more people who wants to sell. So that's why price is on a very sharp decline. And also at the same time, we need to see some volume rising. We need to see switch of hands in order for the market to actually attempt any rebound. Now, interestingly, in Indonesia, we've seen a bit of a rebound here. As you can see here, we've seen a bounce back in the prices. We are very cautious that this bounce back will be sustainable going forward. However, it seems like there's a V-shaped rebound at this point in time. Despite the fragile market situation, we're seeing a very high engagement of retail investors, buying all the foreigners selling shares. As you can see, Mirae and Sekuritas on the day of the trough here, March 24th, all the way up to April 12th, 12 business days, we've ranked #1 in terms of the market share, with a market share of 7.9%. You can see that local market share is currently at 12.7%. So the retail are fighting foreigners in this rebound. I would like to let you know that we disagree with the notion that retail investors are not educated. They don't have any fundamental analysis. They don't know what they're doing. They're just buying or grabbing this opportunity. But we argue, we disagree with that notion. We believe Indonesians are very, very educated. According to BPS, Indonesian population with an age range of 19 to 24 years old, before the outbreak of the global financial crisis and the commodities boom, ask anybody from age 19 to 24 years old, and only 10% of the respondents will say, I am in a university, I am in a vocational school, I'm in the upper education. That doubled over the past 1 decade to 25%. And that goes without saying. High school also up, middle school also up. So people are educated in Indonesia. That's a very important thing. Secondly, because of the technology, WhatsApp, messengers, Instagram, and what have you, retail investors have access to high quality information. So if you take a look at back in the global financial crisis, when Mirae Asset customers or clients, they bought shares of Bumi, they bought shares of PGAS, they bought shares of BRI, PTBA, Bukit Asam, and also Indosat. Take a look at what the price is right now. Bumi is down 95%. PGAS is half. ISAD is down like 66%. So out of the top five stocks that retail investors bought, the only jackpot was actually BRI, because PTBA, over the 10 years, you generate a return of 4%. That doesn't really make sense. So there's only one investment stock that retail investors gain to benefit. But now we're seeing BRI, BCA, Bank Negara Indonesia, Bank Mandiri, and PGAS in from March 24th to April 12th, and they're gaining pretty significant numbers from this recovery. So we have to acknowledge the fact that retail investors are smarter, they have access to quality information, and retail investors are likely to benefit from this recovery. Valuations at this time, the JCI industry as a whole is heavily discounted to the 10-year average. If you're looking at a price to earnings, it's about 23% discount. If you're looking at it from a price to book perspective, it's about 40% discount. So, prices have come down to a very attractive level. And if you are a retail investors, you might want to actually take this opportunity to, invest in high quality stocks because they're trading at a very low discount. The downside risk to this is if the virus spreads in Indonesia for a prolonged period of time, I think the valuation could trend even further downside. However, if the massive stimulus into the economy and the containment of the virus is successful, I think there could be a very sharp recovery in Indonesian equity markets as well. So it all boils down to my final slide. I've taken about 30-40 minutes, and I want to just discuss one important message that I would like to let you know, that if you are an investor, become a futurist. There are four levels of investing in this world, everyone. The lowest level of investment is advice from a friend. So a friend says, hey, buy Astra International, buy Boomi, and then you don't even know the stock, but you just buy because your friend told you that there's this big thing coming, right? That's the lowest level that you can go. The upper level is a technical analysis where you use the stochastic, the MACD, the Williams R, and all these trend lines saying that this is the time for you to buy. This is using the technical analysis, which is the second level. The third level is the fundamental analysis, where you look at the earnings projection, you look at the ROE, you look at the price to earnings, price to book metrics, and then you meet the management, and then you make your investment decision to buy and sell. That's the third level of fundamental analysis, and that's where most people would believe it's the best technique to actually buy and sell stocks. But what I would like to let you know is the highest level of this investment is you becoming a futurist. Now, I've actually put some stuff here, and some people might know because there are so many millennials here. But Windows 95, this old computer, and the modem, where if you have used a modem where you have to stick to the telephone line and where it goes, and the telephone and the movies and Netscape, and some people might not know this, but this is a thing called Walkman, which was a big hit in the 80s and 90s. And this is a map where, back in the days when you wanted to go from A to B, you have to use a map. All of this, if you had an idea that this were to be included into this one smartphone device, then you would have actually bought iPhone, Apple, or Galaxy, Samsung shares. Now, I would like to let you know that if you bought this during the early stage, 10 years ago, Samsung shares would have given you 9 times return. Apple shares would have given you 74 times return. Hence, although you could use your advice from a friend, technical analysis, or the fundamental analysis, but if you believe that something is going to change, like the coronavirus, if you believe that this coronavirus were to change the way we do business, the way we do conferences, the way we learn in school, you might want to become a futurist and think that, okay, the world is going to change into a different state. So I would like to invest in companies that are involved in that businesses. So all that being said, you becoming a futurist and making your investment decisions would be the best investment decision for your investment goals in the future. And that's all for my presentation. And should I give it back to Ibu Dewi?
Okay, yes, Mr. Tae, thank you very much for your interesting presentation. Yeah, well, it's supposed to be my turn to give a soft launch, yeah, but I think there are a lot of participants that would like to start the Q&A session, Mr. Taye. So
Sure.
I think, yeah, I think I will give the opportunity of the 4 participants that already put the question in the chat box. Okay. So I will read, well, actually there's 4 people that Kevin, yeah, Francisca, that would like to ask, but I would like to give the opportunity first to Mrs. Endira Harahap. Ms. Endira also the executive alumni. So the question is, yeah, how the global bonds recently launched will affect Indonesia microeconomic. If the pandemic will last to Q3 2020, how we will survive the 2020 or how the 2021 global economic forecast? So I'll let you answer this first and then we continue to the next question. Is it all right?
Sure. So first of all, I think if the question that I'm understanding correctly is how the bond market movement will affect the economy, world economy, right?
Will help the economic in Indonesia. Yeah.
Got it. So in terms of the recent bond market, we're seeing a heavy concentration to actually the bond. So due to the fact that the global central banks are lowering interest rates, bond prices are coming down, and bond yields are coming down, and that's why bond prices are going up. And a lot of investors are actually searching for taking this opportunity to invest in bonds rather than equities, because they're considered a little bit more safe investments. But here's the thing, if interest rates were to come down, I think it will actually help the economy over the mid to long horizon, because if lending rates come down, the burden for you to actually borrow money, the cost of borrowing will come down, which gives you higher spending amount for you to spend on your daily average. So at the end of the day, lower bond yields are likely to boost economic growth. However, that does not imply that all the economies are likely to benefit from this, because some economies will suffer. And if some economies, like say for example Venezuela or Argentina, which recently experienced a downward revision to the credit rating, the bond prices will actually plunge and bond yield prices will go up, which will again negatively affect the lending prices and so on and so forth. So it's very important for each governments to make sure that their economic status is very well maintained, and also collaborate with the central banks to actually maintain very low rate environment for the economy to actually kickstart. Now, I do not believe that 2020 or Q3 2020 will be the time that it will rebound, or the economy will rebound. I'll be very cautious with that, because we're dealing with an unquantifiable risk, as I mentioned earlier. So hence, I think it will be a little bit very difficult for us to expect when the market will recover. But on a base case scenario, we might be with a very positive outlook. I think we could expect some recovery back in 2021.
Okay, thank you. So yeah, I think bonds actually will relate so much with the interest rate, right? So
yep.
Yeah. However, I don't know if I would like to invest on on bonds. Yeah, I might say I'm at the futurist, yeah, Pak. Yeah, Mr. Tae. Okay. We continue to the next question. Yeah, from Duff here. So, during this virus still exists, will impact on revenue. I have a little bit analysis step by step that this virus will impact to the business. First time, company will doing the efficiency on work from home, balancing resources, and then cut off the salary and benefits until the worst case will happen, which is work termination. And one more is the virus will change the market and customer habits after the virus ends. What is the solution to minimize that risk? And hopefully that risk will close to zero. Okay, so I think the main question is how, when it comes to the worst case scenario, comes to the company lay off the employee and so on. Okay.
Okay, so I understand where the question is coming from, but at the same time, I've been hearing a lot of questions related to this, how the companies might have to do efficiencies, the potential restructuring, potential cost cutting, and so on and so forth. But I want to actually take all our listeners to a bigger perspective, La. If foreign investors were to look at Indonesia, so-called emerging markets, right? Without that growth, emerging market is actually not a very good place to invest. I hope everybody understands this. Emerging market without growth is there's nothing to invest. Meaning, if we cut down costs, and if the cost cutting leads to the bottom line earnings improvement, that's fine from a business management perspective. But if it were to hamper the top line revenue, i.e. growth, then I think it's better off to actually not do the restructuring at this point, because again, most of the investors that's looking into Indonesia is looking for growth. not the efficiency. If they wanted to look at efficiency, they would actually
will
go
not go here.
elsewhere. Right, they will look elsewhere. So in Indonesia, I would like to kind of like illustrate it into this term by saying, if you want to squeeze a half dry towel, right? Half dry towel, you're squeezing out that, you know, the water out of the half dry towel. It's really difficult, right? It's very, very difficult. So, you know, for me, the way I see it, I think it, you know, cost cutting, efficiency is good, but it does, if it has an impact on your revenue, I think management should actually think twice before implementing that kind of cost cutting measures. And yes, it will change the consumer habits. I think, you know, this coronavirus, because it's a novel one, nobody knows how the world will change after the coronavirus. However, the customer habits will change, especially the social habits. I think social habits will change. You know, when you sneeze, before you could just say or achoo, but now people are covering up their mouth with their arms. So I think the you know, the social habits, the cultural habits will change after the coronavirus.
Yeah, agree to that. Yeah, and then I think for the emerging market that still need growth, perhaps the choice of cost reduction and efficiency and laying off is not the option. Yeah, Mr. Tae.
Right. I mean, you have to look at the balance. If your cost cutting reduction leads to your revenue coming down, which is very likely in Indonesia, I think, you know, management will have to think twice.
Yeah, agree. Okay, the next question from Listia Ayu Saraswati. So I read the chat box here. How this pandemic will impact investment and development in education businesses? Okay.
Well, I think the impact on investments is likely that, you know, most investors or businesses are likely to hold back on their investments because, you know, investment is just like, you know, if you're operating a restaurant, you invest so that you make your restaurant bigger so that you can, you know, invite more people into your, you know, restaurant. But right now, I think it's very, you know, fragile market situation whereby if you know, make big investments, if you commit to a big investment and later there's no demand, I think it would be pretty you know, devastating for the you know, managers or the management. So I think investment will likely kind of slow down over the next quarters and even possibly heading into next year, because most of the businesses are cutting down on capex. In terms of education business, I think there's very, very big opportunities in the education business, especially something like this, the Zoom online. You know, my two boys, grade 8 and grade 5, they're currently doing all their education via Google Meet. So the online education business, I think, will likely, you know, become big. So I think if I were to, you know, give an advice to BINUS, I think you should actually, you know, start thinking about, you know, doing online education businesses. But you know, for now, I think, you know, the offline education, I don't know whether I'm a suitable person to actually, you know, respond to that. Maybe Ibu Dewi could rather elaborate more. But the online education business, I think, is likely to develop.
Yeah, agree. Yeah, actually, BINUS already developed. Well, we already developed some online platform. Yeah, and we also have the MM on blended learning, where until now it has a lot of students comparing to other programs, which is because it cater all the people that work in remote area, and then also for them that who doesn't who cannot come to the campus, yeah, and they also have a lot of experience during the blended learning, and that it seems satisfied for
Great.
that blended learning.
BINUS is always ahead of the pack.
Yeah, hopefully. Okay, so for the next question, I will give the opportunity to Kevin, which already has raised hands. Yeah, Kevin, please turn on your microphone so you can ask.
Yes, okay. Hello, Mr. Tae. My name is Kevin, a graduate school student from BINUS Sutra, young professional class. First of all, thank you, Mr. Tae, for your insightful presentation. Then I would like to ask, in your opinion, what should Indonesian government do to lower the USD price? As we can see, one USD is about 15,700 IDR right now, compared to previous peak of 16K IDR last week due to the COVID-19 and other factors. And do you have investing tips in the COVID-19 era for people who have never invested in stocks? Like, would you recommend stocks over forex or vice versa? Well, that's all. Thank you.
Okay, that's a very difficult question, but let me kind of like explain, one by one. In terms of FX rates, there are three factors that impact an FX rate over the long horizon, right? Number one is the GDP gap between the two countries. Okay, because FX rate is a comparison of the two countries, right? It's not a comparison with multiple countries. USD IDR, for example, is a comparison of a GDP between two countries. Number two is the interest rates comparison between the two countries, right? And the third one is the flight to safety, or like investment sentiment, which is at this point, this third point is what's driving the FX rate, not the two. The first interest rate, GDP gap between the two countries and interest rate gap between the two countries, these comprise about 80% of the long-term direction. And the third point, which is the investment sentiment, drives 20% only. So I believe the FX rate between US dollar and rupiah, right? Is US dollar comparison to the rupiah is very, very dislocated at this point. I think the fair price for the FX rate should be somewhere around 14,000, because in the US, we're likely to experience a sharp decline in the GDP growth rate, whereas in Indonesia, the fall might not be so severe. Fingers crossed. Also, the interest rate gap, we're seeing a very big decline in the federal fund reserve at a federal funds rate at 0% at this point, whereas yesterday, the Central Bank of Indonesia, Bank Indonesia, didn't cut interest rates. So the gap between US and Indonesia on an interest rate is actually going to widen, not narrow. So which means that the attractiveness of the rupiah is a lot more than the US dollar. So I believe that when the third point, which I mentioned, the sentiment kind of subsides, I think it would be, it would be a case where rupiah would actually appreciate further, hopefully that down back to the 14,000 level. How can you do that? The most important thing is for the government to actually reinforce investor confidence. Number one, that it has strong control over the virus. And Indonesia, the government of Indonesia has to show the world that it is able to contain this coronavirus situation, which right now I believe is doing a right job to do the de facto lockdown. I wouldn't say official lockdown, but de facto lockdown, the PSBB. Also, social distancing and, state of emergency, locking down, suspending all business, operations. I think they're doing a very good job. So if this were to be successful, I think investors will come back to Indonesia, giving credit to the government. However, if the government is unable to contain this virus, I think the sentiment, the third point that I mentioned, the third point, sentiment actually could be, act against the rupiah, which could actually lead to the rupiah depreciating further. However, on a fundamental scale, as I've mentioned earlier, should go back down to the 14,000 level.
Okay, Kevin, yeah, I think it's clear how to maintain the trust, yeah. Apart from the investors, new investors, which is direct or indirect, and also keeping up with this coronavirus so that we can maintain, we can hopefully reduce the number of victims and also reduce the person that were infected until it becomes zero, right? Okay, so I'm continue to next question. Yeah, so from Pak Iman Chandra, he asked, if you are investor, be a futurist, just agree, yeah? But the question is, how if I am a trader? So, Mr. Tae.
Well, I speak on behalf of long-term investments because, I don't really encourage retail investors to actually trade, stocks. Of course, trading it's all up to the risk appetite of individual investors, right? However, for me, I would recommend a long-term view of investment agenda rather than a short-term trade. But if you're a trader, you can use whatever tools that is comfortable for you. If you believe that technical analysis is what suits you, then basically you might want to use those stochastic MACD, Williams R, trend lines, whatever you feel is comfortable. If you're a trader using fundamental techniques, also if a share price has come down to a very low level in terms of price to earnings on a historical standpoint, you might want to use that. But if you are a long-term investor, I would recommend you becoming a futurist.
Agree. Yeah. So trader also should think about future. Yeah, Mr. Tae, right?
Indeed, indeed.
Okay. Next question, perhaps from Pak Hermawan Honggo. He asked, do you have any idea what is the bottom of Jakarta Stock Exchange, Pak Tae, Mr. Tae? The bottom of ISG?
Right. I've been asked this question a lot with all my whatchamacallit, like institutional investors and foreign investors. I don't have a crystal ball, to be really honest. I don't have a crystal ball. One of my analysts told me that during the global financial crisis, whatchamacallit, like the price to earnings, and if we apply that price to earnings, it could fall below 3,000. That's what he said. But I don't want to actually give you a guidance that the bottom of the JCI is what, 3,000, 4,000, 5,000. It's actually meaningless. As I have said earlier, the market is not driven by the fundamental indicators. The market is driven by the basics of pricing mechanism, which is buy, sell. If there are more people who wants to sell, then the price will go down. If there are more people trying to buy, the price will go up. Now, we don't really know at this point where the sellers are coming from. I'm currently guessing that the sellers are mostly foreign investors at this stage. The buyers are retail investors. Prices are very low at this stage from a historical standpoint, but I think it's because most investors are currently using their gut feelings to make their investment decisions right now, because we're dealing with unquantifiable risks. I think the discussions of the bottom of the JCI is for me, I think it's an unpredictable area. But I think one thing is very sure. One thing that I would like to highlight is that JCI is trading at heavily discounted valuations over the past 1 decade. So if you're looking for an investment opportunity, this could be, your version or our version of the bottom of the JCI.
Thank you for the insight there, because we should still believe that the market is for selling and buying, and not only focusing on the bottom down, yeah, especially in this situation. Okay, so next question from Ms. Putri Astri Rahayu. Yeah, what is the best strategy for investing in the middle of this pandemic? The best strategy, yeah.
Right. So if you're just trying to look at the strategy for this coronavirus theme, I would suggest you start with what's really high on demand. Some of the things that we can use common sense, some of the common sense that we have, we can use to make our investment strategy. Say, for example, all the businesses are currently using Zoom as a tool for business meetings, just like us right now. My 2 boys are currently using Google Meet to go through their online education. Me personally, I'm watching a lot more Netflix these days because basically there's nothing to do at home, right? If we were to see these like everyday things that, as I've mentioned earlier here, that these common sense stuff that we're seeing, I think that we could come to a conclusion that data usage is likely to increase due to the coronavirus. Then your strategy strategic approach should be, so who's providing data? I think there are several names that, in Indonesia listed stock market that's providing data, services. Number one being Telekomunikasi Indonesia. Number two being Indosat. Number three being XL Axiata. And also we have Smartfriend as well. Of course, you have to look at the earnings, and you have to look at their valuation on a historical basis. But I don't think I have time to discuss everything. But just by looking at this, it would mean that the best strategy is for the coronavirus will be that data usage. We could also think about if people are stacking up basic necessities, say for example rice, then you might want to look at rice companies like Hoki, Buyung Putra, right? If you're looking at people watching more TVs because they're staying home, you might want to take a look at MNCN or even SCMA.
Yeah. Interesting. Yeah. So with this work from home situation, so we have also a lot of time to look at the actually the prospective companies, yeah, to invest with. Agree. We continue with Ms. Francisca. The question is, with the projection of global recession, would it be wise to relax the investment regulation in Indonesia to attract potential investors and save the day? Or it's better to keep all the resources we have and suffer a bit longer while waiting for the elevated of the global economic situation? Thank you.
Well, pretty interesting. No, I got you. So it's a pretty interesting kind of approach. I think the question would apply a little bit more to if we had all the coronavirus behind us, say for example. Now, as also the president director and CEO of this company, there are so many things on my mind that I have to make decisions. And if, say for example, like President Jokowi were to think about Indonesia right now, I don't think the time is right for Indonesia to actually think about relaxing investment regulation in Indonesia. That's something that the decision makers would have to think about after the coronavirus. I think the number one thing for Pak Jokowi right now on his mind every single day, from the moment he wakes up to the time he goes to bed, is how to keep Indonesia safe. I believe that President Jokowi will have to concentrate most of his time combating this coronavirus situation. If you were to ask me this question after the coronavirus has come to a settle, I would agree with you that Indonesia needs to relax investment regulations, red tapes, bureaucracy in order to attract funds from outside, because Indonesia, money market is very shallow. We need external money to keep growing. So I believe I would agree with Francisca in the notion that Indonesia needs to relax the investment regulations. In terms of the resources, of course, we need to take a look at what we need to keep, what we need to share. I think that would all depend on what you believe is the greater good for Indonesia over the mid to long term.
Okay, thank you, Mr. Tae. I think, right now perhaps the focus is on make the situation better first, on combating this virus, and after that think about relaxing and so on. So, well, I will continue to the next question. Well, a lot of questions here. Yeah, they're very interesting. Yeah, from Ms. Fiska Rahmat. She asked, after this pandemic is over, what is your advice as the first step for business recovery?
Wow, everybody's looking to the future. Everybody's looking to the future. That's great. That's great. I'm very glad that to know that BINUsians are very positive and also looking to the future. And I want to discuss this from a very I've been saying this agenda for some time now, and I think all business managers at management level, be it your CEO, CFO, or COO, I think everybody should have this one thought on their head. Let's think of it like this: you have the top tier companies, right? top tier companies, you have the second tier companies, you have the third tier companies. Let me just illustrate as an example, okay? Let me illustrate this as an example. The first tier cigarette companies, Sampurna, Gudang Garam, first tier. Second tier, I don't know some names that you might think about. The third tier would be the mom and pops who roll cigarettes in their home, right? They're selling to the locals. And as far as my understanding tells me, there are about 1,000 cigarette producers here in Indonesia, right? Now, let me walk through this pandemic situation. Of course, the pandemic will be over at a certain period of time, at a certain point in time. But if during this pandemic, I think it's very, very important to stay alive, all right? Stay alive. Let's say the second tier cigarette company went bust because of a very wrong investment decision, very bad management decision that a second tier company made, and they went bust. What will happen is that the customers that the second tier company had will have to choose something else, right? The second tier customers, so the customers that were sticking to the second tier companies will actually go higher to the first tier company or the third tier companies. So the first tier companies will grow bigger, and maybe they'll take over the second tier, third tier, or the customers will go over to the third tier. So the third tier companies will even have an opportunity to organically grow, right? So if your business were to survive this coronavirus pandemic, and during a business recovery cycle, you might want to think about that you might be actually benefiting from this coronavirus situation, because most of the clients that were dealing with a failed business model might be using your services or your products, for example. So at the end of the day, the most important advice for any kind of businesses during this pandemic is, first of all, to survive and make sure that your internal strength is readily available to withstand this external shock. And when the market recovers, your important job is to actually make sure that you can win the hearts of the consumers and clients and your potential clients, to invite them over to your services, as what we are at Mirae Asset Securitas is looking at. Because I do believe if this pandemic were to worsen from here, I think there will be a lot of businesses that is going to run out of business actually. So you might want to take that as a very good opportunity to strengthen your business and increase your customer base.
Okay, thank you. The business recovery is everybody's looking for the business recovery actually, right?
But the most important thing is your survival.
Yeah, of course. You survive first and then recover. Yeah. Okay. I continue to the next question from Miss Dara. Yeah. Hello, Mr. Tae. Yesterday, I heard a news about COVID-19 in China that people who has totally healed are infected again. And if this is happening to other patients, I was worrying we cannot move forward. And this case will affect many things, including global economic. So I would like to know your opinion and what should we do? Wow.
Well, yeah, so I've heard also in Korea, in US, in China, that the recovered patients are now being infected again. So I guess at this point we really have little understanding of this novel coronavirus, because we don't really know whether infected and healed, recovered patients will be able to be infected again without them forming internal immunity. So the medical, the technical part of this, I don't know. But the most important thing is for Indonesia, because we're at the early stage of this outbreak, it's imperative that most of the people stay home, refrain from going outside. And if the number of new patient formation were to drop, I think Indonesia has a chance to actually contain this virus at a very early stage and, recovering from this, pandemic. But I guess if you're looking at my insights as to how the, recovered patients can be infected again, I have to go by the news. I have to go by the, cases reported by the news.
Yeah, agree, because some prediction also said that we are not reached the peak yet. So
Right.
I think it's better to keep staying at home, and then keep us healthy as well as possible before this pandemic is over, and then we can start to do our activities again.
Yeah.
Okay. So next is the question about being futurist, Mr. Tae, from Alexia Pratama. So the question is, if I want to be a futurist, do you have any suggestion on the multi-bagger stock to buy? And do you think it's better to buy with dollar cost averaging method? Or should I wait for a few more months until there is a good news about the COVID-19 vaccine? Okay, that's it, Mr. Tae.
Okay, well, first of all, I don't know about the multi-bagger stocks, and like a seminar like this one, I don't like to talk about individual stocks because if I want to talk about individual stocks, I need to make sure that I understand your risk appetite. I need to know your timeline. I need to know your financial goals. So I don't want to talk about individual stocks and recommend any individual stocks that in a seminar like this. But if you want to hear some advice, let me know. Maybe we could arrange a different session for us to discuss about stocks, and I'll leave that to Ibu Dewi for this. Now, in terms of the strategy, dollar cost averaging is definitely, of course, a very, very wise investment strategy to get exposed to the equity market. With the dollar cost averaging, timing is less of a relevance. So if you're asking whether you should use the dollar cost averaging and actually wait for better news, I don't think that you need to wait for any good news to invest if you're using the dollar cost averaging, because any good news, bad news, it will all average down. Average out your investment thesis and investment acquisition price. So at the end of the day, if you want to use the dollar cost averaging to start your investments, say for example 1 million rupiah per month every single month, you don't really need to think about the timing. That is exactly why dollar cost averaging is a good way to begin investing. So if you want to use the dollar cost averaging, invest now.
Right, especially when you got the dollar, right?
Yeah, if you have
when you have the
dollar.
dollar available. Okay, very good. Next question from Ms. Eka Widya Yuliani. So he asked, because Indonesia is a large population with the different economic conditions. So due to corona pandemic and implementing of social distancing, independent quarantine, how do you think, Mr. Tae, that lower middle class society will fulfill his profession that requires him to leave the house? And how should the government do with the situation? Yeah.
Oh, this is a quarantine related question, and the only advice I have is very simple. Follow the advice from the government. The advice from the government is that you keep your hygiene, personal hygiene, good personal hygiene, social distancing, and the government, recommended people not move, well, not move. It's not like not move, but minimize their time outside. So I would say not just the lower middle class or even upper class or middle income households, everybody should abide by the government's recommendation, because if we don't unify to counter this situation together, if some people were to dismiss the government's recommendation, oh, I'm healthy, I can still go outside, I'm not going to be infected, that will defeat the whole purpose, and it will kind of delay the whole recovery process. So for at this moment in time, unless the government actually lifts the PSBB or the emergency situation, I think it's very wise to stay at home and work from home?
Okay. Yeah. I still have several questions, Mr. Tae. Like for example, well, I give from Pak Budi. I will read the questions. So, Mr. Tae, please give some insight on which economic sectors that will not affected much by COVID-19. Can you answer this one?
Well, I think, most of the industries and businesses will directly or indirectly be affected by the coronavirus. But the industries that our head of research, Mr. Haryanto, has been, vocal about is industries which are defensive in nature, such as the consumer companies that produces basic staples are less likely to be impacted by this coronavirus, because no matter what, say for example, if you are like a rice producer, as I've said earlier, if you are a telecommunication service provider, at the end of the day, people still need to eat rice. People still need to wash their faces, brush their teeth, and people will still need to use their cell phone to do their basic, work from home or education. So any industry that has a defensive kind of like angle to it, I think will be the sectors that will not be affected too much by the coronavirus.
Okay, so I think we will entertain one more question. Yeah, I think because we will also continue to the next agenda, to the to the quiz after this. Yeah, so I will take the question from Mr. Andi Lukito that asking. Hello, Mr. Tae. I'm still very new in investment. Currently, I'm investing by time deposit and mutual fund. What is the effect of COVID-19 to both of them, and which should I stay in the long run? Thank you.
Well, I think this is a very, very good question. I think, basically, if you are, just graduating from school, you've just got a new job at a company that you've been, dreaming for, say, for example, whatever the situation you might be in, you need to have your financial goals, be it short term, long term. Way back when I first started my job, my early investment, so to speak, was divided into two. Basically, number one, it was before I got married. Number one was my next year holiday. So I would set aside $100 every single month into a term deposit. Term deposit where you put your money every month, right? The same day, $100, and then after, when I get $1,200 at the end of next year, I would use that to buy my plane ticket and go abroad to, for my holiday alone. Now that's the short term. The midterm and the long term, say for example, if I'm going to be getting married in 5 years, 10 years, then of course this money I cannot lose, right? Of course I would want to, put it in a time deposit. And I have my, my short-term goals, mid-term goals, long-term goals, and I still have a little bit of, leftover money after using my basic, allowance money for the month. I will make investments, and you could go by, subscribing into mutual funds like you've mentioned, but also at the same time you could go buy stocks by your own. And the difference between the two is very simple. Mutual funds, because you don't have to think about what stocks you want to buy, because the fund managers will do it for you. But at the same time, you have to pay the fund manager a certain amount of fee every year, right? But if you invest in stocks by yourself, you have to go through the selection process, but you don't have to pay any management fee. So, at the end of the day, what suits you in your investment method would be your, product to make investments. But the most important thing is that you have a clear understanding of how much you want to set aside for what type of your financial goal over the short term, medium term, and long term. And if you have a small amount of money that you still have excessive amount of money that you might be able to spend, you might want to make your decision to put it into investment fund, mutual funds, or even stocks that you might want to. If you're asking me the question as a CEO of a brokerage firm, I would recommend you make investments on your own.
I think we have covered all of the questions. Okay, everyone, I think we arrived to the end of the session. I thank you for all presence. So, Mr. Tae, do you have any more to say to the
No,
participants?
well, it was a very big honor for me to present to our alumni, and I just want to let you know that when I joined this executive program, I was a director, but the year after that, I became the president director. So thank you, Binus.
Okay.